Welcome back to Dukascoin TV's on finance. Now let's jump straight into today's topic. The Elon Musk Twitter saga, definitely one of the hottest highlights of last week. We have seen situations like this happen repeatedly in the business world, where a takeover is fairly common. The thing is, there is always a big firm or a big investor with big bags wanting complete control of a company by taking over it. Takeovers, on the other hand, aren't always pleasant and might turn nasty if the target refuses to collaborate and does not have a desire to be taken over.
I took that bed and hit him upside a paya. He said, "Oh!"
When a corporation is threatened with a hostile takeover, it may employ the poison pill method to make itself less appealing to the possible buyer. As the name implies, a poison pill is anything difficult to take or accept. The point is to make its shares unappealing to the acquiring firm or individual, and poison pills also significantly increase the acquisition cost and offer strong disincentives to prohibit such attempts entirely. However, using the poison pill doesn't always imply that a firm is unwilling to be acquired. It may also be used to get higher valuation or better terms for the acquisition. On April 4th, 2022, Elon Musk announced his purchase of a 9.1% stake in Twitter. The news sent the company's stock price to a higher high. What led him to buying Twitter stocks? The Tesla billionaire publicly questioned Twitter's attitude to free speech on March 25th, 2022, via a poll on his Twitter account. After that, Twitter announced Musk's appointment to its board of directors, and Musk announced in a tweet that he plans to work with Twitter's CEO and board of directors to make big changes to Twitter in the next months. On the other hand, Musk turned down the chance to join the board of directors after initially saying yes. As a result, after refusing a position on the Twitter's board, he changed the Securities and Exchange Commission filing to clarify that he would not be a passive participant in the company's activities. So what was Twitter's reaction? Well, Twitter decided to use the poison pill strategy, making it more difficult for Musk to purchase a major share in the firm and to prevent a hostile takeover. Despite this, Musk said he is not sure that his offer to buy Twitter will succeed. He also stated that if his bid for Twitter is turned down, he has a plan B, but did not elaborate. Now, is there a way for Musk to bypass the poison alert? Musk can get around the poison pill by holding a proxy fight. Musk would have to send out a proxy solicitation and get 51% of the votes cast by shareholders. Musk could then replace the present board of directors with people who support his takeover strategy. Also, we know Elon Musk has a superpower to manipulate the prices of stocks and commodities through his tweets. We noticed that the price of Twitter jumped up when he announced he bought a part of the company. So, what can we expect of Twitter's stock price when he announces that he will be dumping his positions? And speaking of hostile takeovers, Beanstalk cryptocurrency was robbed of reserves worth over 180 million in seconds after an attacker used borrowed money to buy enough voting rights to move the money away. The aggressive takeover raises new concerns about digital currencies' unregulated nature and lack of investor safeguards. Beanstalk, which builds itself as a decentralized, credit-based stablecoin protocol, offers a cryptocurrency by the name of Beans, with a fixed value of $1 per coin. It essentially functions like a bank, allowing savers, beans farmers, to make a deposit, beans into a field, and use their money to keep the price of a single bean at near $1. Others were urged to deposit cryptocurrencies like Ether into a silo in a return for voting rights over the organization's operations. One such vote led to Beanstalk's entire silo being moved out of the organization on Sunday night. An anonymous attacker had borrowed $80 million in cryptocurrency and put it in the project's silo. earning enough voting rights to pass any request quickly in exchange. They used that authority to vote for the transfer of the Treasury's contents to themselves, then returned the voting rights, withdrew the money, and repaid the loan in seconds. Quite an exploit. We should see some famine on the blockchain with the look of things. Stephen Deal, a cryptocurrency expert, said the attack was in a gray area. It's possible for someone to basically buy up all the shares in an organization. In the normal corporate world, this would be illegal because it's embezzlement and self-dealing. However, with a DAO, decentralized autonomous organization, it basically exists outside of any regulatory perimeter. So basically anything goes and the code dictates everything. It's technically legal in some sense, but it's a very gray area. We saw the value of Beans break the peg immediately after the attack, trading for substantially less than the dollar per token, a token that was designed to reflect a steady value. On Monday, however, the stablecoin's value was about 12 cents, indicating that some traders were willingly buying Beans in the hopes of a rescue package arriving to replenish the project's treasury and restore the peg. Hey, thank you so much for watching another episode of On Finance. And look, make sure you keep yourself up to date with all the financial news all around the world and support your future investment decisions. And I'll see you on the next episode of On Finance.